A very warm welcome to all investors present here in today's live event. We have with us our Chief Investment Officer, Mr. Sunil Damania, who would be evaluating how IT companies have performed in the recent quarter results and what the future holds for the sector. Towards the end, we'll also be having a short Q&A session where you could simply drop in any queries you have in the Q&A box available just below the video. Over to you, Mr. Sunil.
Hey, thanks a lot, Jason, and very warm welcome all of you. If you remember, almost every quarter we do a review of what is the trend suggests for the IT sector. And one of the reason is that IT sector has a very significant role, whether it's a Nifty 50, whether it's a net profit of India Inc., or overall market cap. The most valuable sector as on today, despite so much headwinds that IT sector has faced, continues to be IT, the most valuable sector in the country. And that's why investors, very obvious, they would be little concerned about how it has performed and what should we expect going forward, because this is the same IT sector which did extremely well. If you remember, I did very similar webinar in the month of April, and before we discuss what we discuss and how much that has come true, let me start my webinar with a small disclaimer that this webinar is only for an education purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance should not be construed as an indication for the future. With this, if you remember, this is what I predicted. So I think we have a short clip, and I would request my colleague Jason to please play that clip so you understand what we predicted and how is the market has happened. We did this webinar on 13th April 2022. Over to you, Jason.
Yeah, we'll just play the particular clip.
Yeah. And I'm making a prediction now. We don't expect IT sector to outperform at least till September 2022. Either it will continue to underperform, or in the best case scenario, market performer. So अगर Nifty 5% ऊपर गया, IT index will go up by 5%, and so forth. Or if the Nifty goes down by 5%, IT index will go down by 5%. But should we expect at least by September 2022, that is the next 6 months, can IT as a sector outperform? The answer is no. So you would have seen, I have clearly stated that will IT sector outperform? The answer is no. So what has happened then? Has IT sector, and what happens to the IT companies? If you look at it, each and every company, a leading company within the IT, have underperformed very significantly, and no one has made money. And this is an IT index I'm talking about. Infosys has the largest weightage because of no identified promoters, while the TCS is the most valuable IT company, but 75-76% is owned by the Tata group, and that's the thing. So everyone has gone down, and when you look at vis-a-vis overall market, while Sensex and Nifty are down by 5%, IT index is down by 27% in 2022, and that clearly shows the level of underperformance that IT. Now the question that comes, since the results have come, except Infosys, which is going to declare in next couple of days, what is the scenario? Has the pain is over with the IT sector? Because I've been saying that the pain in the market is over. But can we safely say, and can we safely assume that pain in the IT sector is over? And that's what I'm going to discuss in great detail in next half an hour. Now, before I go and start prediction, we must all understand the significance of IT sector. If Nifty 50 has to do well, the lot of heavy lifting has to be done by IT sector. Why? Because it's controls 16% as on 30th June 2022. It controls 16% weightage in Nifty 50. Of course, in October 2021, when I did the webinar, it was 18%. So it has come down. And you know why it has come down, because it's significantly underperformed as compared to Sensex and Nifty. In October 2021 also I suggested that IT sector will not perform well. And that at that point of time, IT sector was the darling of the investors. And I said, you need to be stock specific. I don't have the video of that, otherwise I would have played that video also. The point I wish to convey is that the God has been kind and we have been able to predict the sectoral in extremely clear-cut manner, helping you to take a right decision. Now, when it comes to Indian profit, it accounts for 11.5%, 11.05%, which was near about 13%. And market cap, total India's market cap, and what is the share of IT companies, it's 11.33, which is also further come down. It did come down significantly in last couple of months, purely because IT sector has been struggling to get investors' attention. And in my slide, which I'm going to talk about, how FIs have sold very heavily in the IT sector. That graph would definitely help you to understand that. So let's try to understand then why is that IT sector is under pressure. And then if you understand that, then we will see whether those reasons continues to be there or not there. And hence we can take a call whether it will outperform or not. So if you look at, there are four major reasons why IT has been struggling. The big reason is a high attrition rate across IT as a sector. And due to that, the companies have been forced to pay higher salary to retain the employee. So supply side constraint has been very, very significant for the IT companies. And that's one reason, and I'm going to showcase you how, when we talk about any, like we did with auto sector, am I right? And I talked about how material cost accounts for 75 to 80% for almost all IT companies, am I right? The same way, the raw material for IT service sector is employee cost. If they can manage employee cost well, their margin expands. Somehow if they are not able to manage well, the margin contracts. And that's what exactly has been happening. If you listen to the commentary after comment, and if you happen to listen to any of the con calls of any leading IT companies, the one question that management would focus on and discuss about it, and analysts would also ask the same question. IT is the only sector where the head of HR would be part of the con call. You don't see that happening in FMCG sector. You don't see that happening in banking sector. You don't see that happening in steel sector or aluminum sector. But whenever you participate in the con call or even the media interaction, you would always see head of HR a part of that discussion. Why? Because employee cost forms a very significant portion. And if you remember, the reason I said in October 2021 and April 2022, why IT may continue to underperform, because of attrition rate that continue to remain at the elevated level, and which has further increased as we speak for the quarter ended June. I'll come to how do I see for September 2022. So that's one reason. Second thing is a global uncertainty. The world, the economies are slowing down, whether it's the United States, whether it's the ECB today hike the rate of interest to control the inflation. China is slowing down. And due to that, the whole world is going to slow down. If this is going to happen, will there be a cut in the IT spending? And that is making market little investors little nervous about it. Number three, it is more of a sentiment. So, I'm going to showcase you how Nasdaq in Indian IT sector price movement is happening. in 2022. So if you go rewind little back, there is no kind of a correlation as such. But in 2022, I don't know the reason, to be very frank with you, so don't ask me also the question answer, why is that so? I don't have an answer, I'll admit candidly. Logically it should not, but the fact of the life is that there is a collateral damage that is happening. If Nasdaq is falling, somehow Indian IT sector is also falling. And I'll showcase you with the graph so you people can relate to it. Now you may think, if you are paying higher salary, you should be able to pass on the cost to the end customers. But the fact of the life is that you are not able to pass on because of competitive pressure, and hence IT companies are taking a beating on their margins. And that's one of the reasons. These are four main reasons why IT sector is struggling to get investors' attention. Now I was talking about Nasdaq and Indian IT sector. So what you see, the yellow line on the screen is an Indian IT sector. And what you see, red or orange, depending upon resolution of your, or pink, whatever that this one, is a Nasdaq composite. And you see both are moving in tandem. And due to that, while YTD, that is in 2022, Nasdaq is down by 25% and Nifty IT is down by 27%. This is as of yesterday, because Nasdaq just opened today, so we have not taken, so we have taken IT also for yesterday. The moment you expand that, and for 1 year, you don't see much of a correlation, am I right? So as I told you, I don't know why there is a correlation between Nasdaq and IT, but that's a collateral damage that Indian IT companies are suffering from. Now let's look at the fundamental issue that has been plaguing this sector. Attrition rate. What is attrition? It is nothing but percentage of employees leaving that particular company. So most of the time, IT companies are good paymaster. In our company also, we pay our technology staff very handsome salary. And that's been the case with TCS, Wipro, HCL Tech, and so on and so forth. And look at the attrition rate, how it has significantly gone up. Just look at Mindtree. On June 2021, it was only 13.7 to reach 24.5. HCL Tech, it was only 11.8, gone up to 23.8%. 15, increasing to 23. And the number that you see in red, the font red is basically, it has deteriorated further as compared to March 2022. I must tell you, I have said in the past, I'm again repeating, IT companies, you should always look at quarter on quarter, never on Y. The management sometimes may force you to think you should not believe that management. Please evaluate the company purely on quarter on quarter. So, if you look at in March 2022 versus December 2022, each and every company reported deterioration in their attrition rate. But in June 2022, out of 7 companies that we have, 4 companies have seen deterioration, 3 companies have seen improvement. Little margin. Infosys not declared the numbers, that's why I've said NA. Most probably it should have gone up. That's what my guesstimate, but we'll wait for the company to announce the numbers. Retaining employee has been the biggest challenge. And that really impacted the margin. I'll come to the margin slide in my next. The one good thing which gives some ray of hope, I must be upfront, the delta in attrition rate has been very low. So the attrition rate used to increase at a very higher rate, which has started, it is increased for some of the companies. But the pace of growth, pace of increase has come down. And I think that should give some comfort level to the investors. Now let's look at the margin side. Can you see while we saw attrition rate, some of the companies were in green, except Tata elxsi, which is our Mojo stock, which did extremely well. So while overall IT sector is struggling to create wealth, our Mojo stock, Tata elxsi, that we hold in our model portfolio in Mojo Infinity, they did extremely well in 2022. And one of the reasons why Tata elxsi has been the outlier because of its margin expansion. TCS margin coming down from 27 to 25. Mindtree has been able to maintain. HCL take down, LTT is down, LTI, that is Larsen & Toubro Infotech. Wipro is one of the lowest, 15%. And when I come to my presentation on Wipro slide, the management doesn't expect the margin to improve further going ahead. Why? Because management is saying they were going to invest, so that margin will remain. And remember, in June 2021, that was 19%. It was 27, which has increased to 33, but this is 20, has come down to 25. So the drop has been 25, has become to 21. That drop has been very, very significant in terms of margin, purely because of attrition cost. And till now, total 20 companies have declared IT service sector, okay, IT software. 40 is positive, 25 is negative. So that gives you an idea about positive versus negative ratio. But when you look at only IT index, 46% positive, negative is 15.4. So it's a mixed bag. There is nothing called outstanding or the worst. It's not. It's very more of a mixed bag. And when we look at how the market has reacted to the numbers, the more companies post result have advance. Most company post results as an advance, while few companies did decline, but marginally. Now that look at if you have to aggregate everyone and see where does the net profit of IT company for June 2022 based on the number that has come. Down by 7% quarter on quarter. Even if you look at Y on Y, we should not look at it. It's only marginally up 1.7%. It's not a very happy sign. And let's try to understand now what each management is talking about. TCS says margin pressure will continue, but may improve sequentially. They do believe that attrition rate will further rise in September before it starts giving some comfort level. So do not expect relief from TCS in terms of attrition rate. But TCS management, and that's not the TCS management which I'll showcase you in the subsequent slides of other companies also, everyone is saying that tech spending is resilient. No one is expecting, because of slowdown, the IT budgets are going to be cut. And I'll also talk about Gartner, which has made some prediction. I'll come to that. And one more very interesting thing that TCS management mentioned, which no other management mentioned, was that overall realization is still in the negative on sequential basis. In other words, your cost has increased. You are not able to bill that to the customer. And due to that, what happened for TCS, even though the quarter on quarter, the revenue went up by 4%, the net profit is down by 5%. And where this company's revenue growth came, I think each and every region helped Latin America, North America, including India. In India, we all know that they got that passport business, renew of that, UK and so on and so forth. So the growth has been from each and every region. Attrition rate has gone up very significantly from 8.9 of Q2 FY 2022 to 19.7 double. And the company's revenue, employee cost as a percent of revenue is also rising, which is not a very happy sign. Am I right? OPM declined sequentially. If you look at it, how many quarters low, which explains things are challenging. HCL Tech also reported decline in this. They did mention that Q2 and Q3, their margin should improve, but Q4, again, it will come down. That's what they stated. Okay. The management has given 18 to 20% guidance when they declared March 2022 quarter numbers. For the FY 2020, they said 18 to 20. That they maintain. But if you listen to the con call, the management says it would be at the lower band. In other words, even though they given 18 to 20, one should not expect 20%. It should be more in the region of 18% for HCL Tech. And they did mention that they'd see one more quarter of pain as far as attrition is concerned. And they have a very similar story in terms of guidance of what TCS has given. Again, the same story, what TCS, while top line increased, bottom line declined. Each and every region helped Y on Y. Attrition rate again increased, same story. And employee cost as a percentage of sales, while TCS we saw increasing, it has marginally decreased, which is a good sign. But anyway, if you look at it, it's still a little higher. Am I right? And due to that, the operating profit margin, which was 27 something, has come down to 21%. Substantial decline. Let's look at Wipro, which declared the numbers yesterday. Same story, operating profit margin dipped to 15%. They do admit, management has been very candid, that their margin will remain under pressure because they claim that they're investing, and since they're investing to make the company future ready, this will remain. For a change, while we saw TCS and HCL Tech, attrition rate has increased, for Wipro it came down 23.3% from 23.8%. And management has gone on the record, while TCS and HCL Tech do believe it will go up, this company says it will further decline. Completely contrary to what TCS and HCL. So that's why I said stock specific now. There is some trend which is getting little different. The reason I'm giving you this data point so that you people can also, my job is also to educate you, or not only to give you buy and sell so that you become more matured investors. Same story, top line growth by 3%, but bottom line down by 17%, significant. Region wise, each and every region has grown, and at least at rate which marginally declined, but what used to be 11% has gone to 22%, 23%, substantial increase. And the employee cost as a percent of revenue has also increased. And due to that, the profit margin has come down to only 15%. Mindtree, very similar kind of story. And company is talking about the attrition rate 24 against 23.8, which we saw in another slide also. Again, the same story, 8% revenue increase, but net profit did not see that kind of a growth. Again, each and every region helped to this one, attrition rate increasing and margin coming down to 59%. A company which used to have employee cost of 66 has come down to 59%, which is a good sign, which is a very good sign. But margin overall remains at 20%. So it's a very good margin to have just consistently above 20. I believe it's a good one. Why? Because it's a very challenging environment. They have done that. Tata elxsi, our Mojo stock, done extremely well, and company has gone on the record saying that demand outlook is extremely strong. And company also has seen a dip in the attrition rate, something similar to the Wipro. Very few rare example, while top line grew by 6%, bottom line increased by 15%. In other cases, see the difference that is happening within the same sector. And what is happening with that? This is a region-wise revenue, and then the attrition rate of Tata elxsi, which has come down. Employee cost is 50%, which is very good. See, for other people that are in excess of 50%, it's very closer to 50%, if you can see that. Sorry, it's a very good data to have this 50% only, which was 63%, has come down to 50%. And that's one of the reasons investors are loving this company. Margins have improved 23% to 33%. Why? Because of employee cost coming down. LTI, very similar kind of story, so I'll not spend too much time on that. Again, 5% increase, 1% decline. Same story repeated. Other markets, they are growing, and how attrition rate has come down marginally to 23%, but not so much. Employee cost as a percentage 64%, which is very, very high, with the operating margin of 18.4%. It's better than this one. Now, it's a very interesting. Gartner is a agency which talks about the outlook in the 2000. They are basically give a lot of guidance about IT sector. And what they are saying is that, what really like me is that they say that cloud spending is going to increase, and is going to increase by 22.1% in 2022. And that's a very good opportunity for a company like Indian IT sector. There are two things which is helping Indian IT sector: cloud transformation and digital transformation. And this too is giving a very good hope for the Indian IT sector. But while Gartner do believe that, the supply side issue could continue till end of 2023, but some of our Indian IT service sector do believe that they don't see much of a pain post September 2022. They do see the moderation in the attrition rate. Let's see what Gartner says and what has to happen. But it clearly says that the IT sector, worldwide software spending could grow 9.6% in 2022, and global IT service is going to reach 1.3 trillion in 2022. And this is what I think we should all be focusing on, that IT service, how it's going to increase 6.2% and 8.3% in 2023. This is what this one. So now what should be your strategy? Investors definitely concerned with the slowdown in the global economy, supply side issues due to the higher attrition rate and higher salary cost, and they are not able to pass on to the end customer. These are the concerns. Most of the Indian IT companies have said, while Gartner says it will get eased by only end of 2023, but most of the Indian IT service company says that they will see one more quarter at the elevated level, and post September 2022, they will see some kind of a relief. Economic slowdown is not able to help them to pass on this one, and hence there is a fair possibility that by September 2022, we may continue to see poor margin from IT services sector from India and the net profit. So don't expect any miracle for September quarter. Why? Employee costs will remain at the elevated level. Companies will not be able to pass on that wage hike to the customers. Why? It's a very competitive pressure. And hence, of course, the travel and the H1B visa cost is normalizing. A lot of offices have started opening up. Like we used to operate work from home. Now we are working from office. And when you work from office, a lot of incidental expenses goes up. Whether electricity bill, whether it's your refreshment to the staff, that goes up, and other expenses which related to the office, that goes up. And that will also apply to the IT services sector also. For a strange reason, Indian IT index is mimicking Nasdaq. And hence, keep a close watch on that. How is the Nasdaq is performing? That should be your strategy, part of your strategy. I would not have recommended this in April 2022, but I am recommending July. Why? Because that's what the pattern has been. And we continue to believe that few companies within the IT sector should do extremely well. But other companies may continue to struggle to report, to give capital appreciation. One good tailwind that Indian IT sector has is a depreciation in the rupee. Some of the companies have hedged their position, so they may not be able to translate that, but otherwise, so I continue to believe that it will not be what we saw from April till today. Am I right? In terms of the price destruction that we saw, in terms of IT companies' price movement. Let me take you that slide to my initial slide. The decline would not be as severe as what we saw. But I do believe that some of these companies will continue to struggle in terms of giving capital appreciation to the investors. Let me just, it's a very big presentation I have to this time. So let me just take you very quickly the slide which I was talking about. This one. I've made very long slide presentation, Jason.
Yeah, quite a big one this time.
This one. What I was saying is this one. If you look at it, all the companies have seen decline. We don't see that kind of a performance. Okay, the 26, 27% kind of decline. We will not see that kind of a decline, but definitely there will be a level of underperformance in the IT sector. So I think that's what we need to be very, very watchful. Not all companies will do well, but level of underperformance will not be so big also this time. I must tell you that also. But since I do expect that market is hit the bottom, and hence don't have too much exposure to IT sector, otherwise you may underperform overall. So they may do well, but overall market if does well, you may see underperformance coming in your portfolio. So remain stock specific. We continue to believe Tata elxsi will give money, will make money for the investors. Why? Because the way it has performed and the way it has given the commentary. Having said that, now coming to the, so I discussed about what should be your strategy on the IT sector. Now, let me give you some data points on how FIs are selling. 7.49 lakh crore they were having, it increased to 7.61 on January 2022. And since that level, you can see that it has come down to 4.83 lakh crore. Substantial. So I do believe FI seems to have done with the selling in the IT sector is concerned. At the same time, Indian mutual fund industry seems to have increased the stake. Despite the challenge on attrition, despite the challenge on margin, in most of the IT companies, they've increased the stake from March 2022 to June 2022. So, where should you park your funds then? Tata elxsi continues to remain our top pick with 77 score. It is a Mojo stock. We continue to believe it should do well. No other company based on our IP is a buy. Mindtree 65 score, LTTS that is last October 61, Take Mahindra 60, Infosys 57, so on and so forth. And companies like Mastek, Wipro and Coforge, they are clear-cut sell. But what has come as a big surprise that if you look at it, most of the company's technical indicators also suggest that they are not going to do well. They may continue to underperform a little going forward. So just to summarize, IT company will underperform, but not as much as we saw from April till July. Number one. So they may go up also, but the overall market may do very well. That's what I'm trying to say. Remain stock specific. Tata elxsi is our topmost pick. We continue to believe it should do extremely well even going forward. If you want, which are the Mojo stocks that we have in our master list today? It's all available to you if you become a members of Markets Mojo. 19,999 for 2 years comes at a massive discount of 50%, which works out to near about 10,000 rupees per annum, less than 30 rupees per day. I request my colleague Jason to please drop the link and let's open the floor for a question answer. Thank you everyone for your time. Let's over to the question answer.
Okay, I think most of the questions which are coming now are basis which stocks we should buy in IT. This first question by Mr. Prince is that should we now invest in IT sector or wait till we just get buy recommendations on Markets Mojo scoreboard?
So wait for the market recommendation on the buy. But the immediately if you wish to buy, then one company that comes to my mind is Tata elxsi. You can go ahead and buy that.
Okay, this next question by Dr. Chirag. What's the scope for mid-cap IT companies?
I think mid-cap IT companies, the way they are commanding some of these mid-cap IT companies, they continue to command a very rich valuation. It doesn't leave much scope for the capital appreciation. So my advice would be to, again, stock specific, but most of them will underperform.
Okay, question by Mr. Rajkumar. I am holding LTI, LTTS, Mindtree and Tech Mahindra with a loss of around 25 to 30%, hoping it will recover before end of this year. Please advise if I should continue to hold.
If I would be in your place, I think except LTTS, I would have basically asked you to move out from both, book your losses and go into another Mojo stock. That's what my advice would be. LTTS, you can continue to hold.
Okay, this question by Mr. Akshay, and I think along with Akshay, a lot of investors have asked, what's your view on Happiest Mind?
I've not looked at it, Happiest Mind, my dear friend. I don't think they've come out with the numbers also as we speak. So maybe let's wait for the numbers to come out. Let me just see. One second. My laptop has become a little slow because of this. It's a hold in our system. Maybe you can continue to hold LTTS. But in terms of value, I think you should wait for the numbers to come. I think then you should take a view. So my suggestion would be, it's today only. I think the result is today only. So it has come out with the numbers. I don't know. It's not updated on our site. Let me tell you very frankly. Yeah.
Okay, I'll move on to this next particular question. This is by Mr. Sivan. He says, Euro is keeps on depreciating against US dollar. Our IT giants TCS, Infosys, HCL and Wipro have good exposures in Europe. What could be the impact? Ukraine war is currently ongoing. Gas supply to Europe is going to cut. What impact would be on the European economy, especially Germany is the major economy power in Europe.
So I think what you said is very true, and I'm happy to have this kind of question coming in because that gives you the level of your understanding, level of your reading about what's happening in the global economy. I'm happy. I think, yes, you are right that other companies do have an exposure to Europe, and Europe has been, so Indian rupee is appreciated against the euro, and that could be some amount of headwinds. We need to look at in totality what is happening in dollar versus what benefits they get in dollar and what benefits they lose out because of rupee appreciating against the euro. So those who have more exposure, I think they would definitely face some problem. But when management of TCS was asked very specifically about the Europe, okay, how are they looking at the demand scenario, they continue to believe that Europe does not give any cause of concerns for them, and at least in the short run. And they don't expect any slowdown, or they are not experiencing any slowdown in terms of deal pipeline. So my sense as we speak, there are no dangers. But the only thing that could happen is that the pricing power may not be there. So, previously if had Europe been doing very well, you would have gone to the customer and said, boss, I am paying higher, they call it cola. How many people understand cola? It's not Coca-Cola I'm talking about, COLA. Okay. And that is nothing but the cost of living that basically they can compute that adjustment. And that normally one could have asked for it and they would have got it. But very fact that they know that economy is slowing down, and if they ask for it, the customer might go either may not give you the contract or may give it to someone else. So this IT companies are continuing to face that kind of a realization challenge, and hence those who have more focus on Europe I think they would definitely face some headwinds as compared to someone who has more exposure to rest of the other parts of the world other than Europe. I think that's where you should look at it.
Okay, I'll move on to the
Just
next.
to give an idea, this happiest mind has not yet declared the numbers. I was just checking on BSE side; it's not declared the numbers. Yeah, over to you, Jason.
Yeah, so Mr. Vishal has asked, dear Sunil, in addition to Mojo Score, could you please share your preference of one mid-cap and one small-cap IT stock?
Sir, my suggestion would be go with the score of the company which I presented right now in my. I think, but why do you want to buy only IT stocks, one mid and one? There are many other mid and small caps are available. Why do you have so much love for the IT stocks only? As and when the score changes, then, and I do come in front of you every day. And as and when that happens, please ask me and I'll be more than happy to answer those questions. Right now, there are none. So my preference would be only Tata elxsi. That's it.
Okay, I'll pick this one question, Mr. Lakshmi. Hi Sunil sir, I have two questions today. When dollar is going high against rupee, means IT companies will get more rupee in conversion when clients pay them in dollar. That case, IT companies should rise, but dollar is high and IT companies are falling. My second question is that in UK, if the new PM will be the son-in-law of Mr. Murthy, will it be positive for Infosys?
So let me answer the second question first. I don't think so. And try to understand, Mr. Murthy is not running the company. Am I right? So I don't think so. And I think the governance standard will come in, and I don't think it's going to be too positive. There could be sentiment positive, but not in terms of business. That's what I can tell you. You are see the why the despite going the dollar appreciating against the rupee depreciating against the dollar, it's not reflecting in the margin, sir. And since it's not reflecting in the margin, that's why we see divergence. And many of these companies would have hedged their position, and hence it is not going to realize in the profit and loss account immediately.
Okay, I'll pick this next question by Mr. Shastri. You mentioned Gartner. Gartner primarily talks of US and to an extent Europe companies. Though global companies like Intel, Google, etc. reflect Gartner unlikely that is applicable to predominantly Indian IT companies. That's my opinion.
Sir, where is the demand comes from for Indian IT service sector? The customers are in Europe and US only. Am I right? And if they are not going to spend, then who is going to give the revenue to the Indian IT service sector? So we do believe that Gartner has a lot of relevance from the Indian IT, and it's not me who is making the statement, sir. You need to listen to some of the commentary interview given by the IT company's management, and they do cite Gartner as a source to give their outlook for the future.
Okay, I'll move on to the next question. This is by Mr. Pawan. Where are the employees going? Are they just changing jobs within the industry at higher salaries?
You're right, sir. Pawan ji, आपका बहुत अच्छा observation है. They are doing exactly the same. Someone is offering them higher salary, so they are going jumping. And if you want to retain that employee, then you basically match the salary that they are getting from the next employer or the future employer, and that's how that's happening. So it's a crazy thing. What has happened, I must also tell you, which I did not mention in my PPT, is that a lot of these startups have started slowing down in terms of their recruitment. Even some of the leading IT companies like Microsoft, Alphabet, and so on and so, Google and Amazon, they have also slowed down in their recruitment. And that will give some relief to the IT service sector going forward. But and startups slowing down, asking employees to go, could give some relief to the IT service sector. But you are right, they are basically moving within the same industry with the higher salary. And in fact, they are very much in demand today.
Okay, this next question by Mr. Sudhakar. What are the prospects of new generation IT stocks? I think you've covered Happiest Minds. He also asked about Nazara Technologies. As they don't have 5-year financial trends, your ratings do not guide properly.
So, sir, I have given my view some time back, and this is my personal view, so don't blame me. कि website पे कुछ अलग है, यहाँ पे कुछ अलग है. See, I think Nazara Technology is more of a gaming company. Gaming company is an extremely difficult business to be. And you need to come out with the innovative products. And if you don't come out with the innovative products, the market is not going to like you. Am I right? So, and the way things have happened with Nazara, I'm not a very big fan. So, in fact, someone had asked me previously and I suggested clearly no. Year to date, this company is down by 52%. And I don't see this company creating wealth for the investors. So, my advice would be to stay away from Nazara. It's a very competitive industry. And name of the game is that you should be little ahead of the curve. You should be out of the box thinking. And somewhere I get a feeling, my personal opinion, I may be wrong in my judgment, that management is not thinking out of the box, to come out with a game which can create excitement and create stickiness. See, game business is all about stickiness. And the way the technology improvement is happening within the gaming space, I think I do believe that Nazara is behind the curve in terms of that. That's my personal opinion. But my advice, please stay away. It's not to invest in Nazara technology.
Okay, moving on to the next question. Sunil sir, excuse me if I could take this up, but a lot of investors are actually writing this. They're writing about ITC touching 300. Mr. Varun has also asked, can we buy ITC at this price level now?
I think we all listened to what yesterday the ITC management had to say in the AGM. And they did mention that they are going to unlock some value for the hotel business. Once that happens, maybe I do expect some other business to unlock because management does realize that they've underperformed very significantly. And if they don't do anything which can create value for the investors, I think they will find it a little difficult to face their shareholders. So I do believe that, and if you remember, ITC was also stock of the month that we recommended. Jason, when did we recommend ITC as stock of the month?
I think in June pick, I think.
Sorry?
June.
And we continue to believe that ITC should do well. So yes, you can definitely buy even at the price of 300 rupees.
Okay, moving on to this question by Mr. Hardikar. He says that in the entire presentation, the currency fluctuation is not being discussed, where for quarter one it has been very significant.
See, it's not reflecting in the bottom line, sir. Am I right, Hardikar? That's the reason we have not, I have not included that. So that is, I did mention in my presentation that that's a tailwind that will happen. But my suggestion would be that it will start reflecting maybe because you would have hedged your position. So it will start reflecting maybe second quarter and more so in the third quarter.
Okay, moving on this question, Mr. Sarang. Current measures by RBI suggest that rupee should not fall much from here. That's around the $80 level. Taking that into picture as a whole, isn't it a big negative for IT stocks, especially those having huge client base in USA? Please elaborate.
No, Sarangji, no. I think 80 is a good price. Am I right? You are getting it almost 6-7% more than what you were getting in beginning of 2022 or so. So, and of course, if you remember, many times I have suggested that RBI 80 is a bottom that rupee has touched. We don't expect more further fall from 80, but it's not negative as such, sir. On the contrary, it's a positive, it is a tailwind, which will start reflecting maybe second quarter and more so in the third quarter of Indian IT companies.
Okay, question by Mr. Madhusudan. I have 3 IT stocks in my portfolio: Persistent, Saxoft, KPIT. I want to reduce my holdings in IT sector. When I look at the Mojo scores, the score of all stocks are similar. Which stock should I sell?
Madhusudanji, my request that you just use our switcher as a feature which will help you to suggest you which company you should move out and which company you should invest in. I think the switcher will definitely come very handy for you, sir. Why am I suggesting switcher is that it will help you to understand based on your preference, because it does give you the option whether you want to move in the mid cap, whether you want to move within the mid cap IT space or across the market. That's why I'm not giving you any answer, because you can do it yourself and that will be better for you to figure it out.
Okay, this question by Mr. Mohit Suri. Tata elxsi is also commanding very rich valuations. Is it justified to pick Tata elxsi instead of Mindtree?
Yes, sir. Tata elxsi is definitely justified. I think the kind of business, the kind of resilience they've shown in their business model, that makes me believe that they should definitely command as preferred over the Mindtree. No doubt about it.
Okay, this question by Mr. Venumadhavan, a few investors have asked this. What is the scope of NIT? I know it has exited, but what's the scene here?
It looks like that it should underperform. That's what our sense is. Then, as I was mentioning other day also, I think the Canadian real estate market does have an impact on the kind of business that NIT can do. It's a good management, no doubt about it. But my sense is that it should underperform, and hence my advice would be to stay away.
Okay, Mr. Rao has asked this question. What do you think has caused the attrition? I think you answered that. And is this issue softening? And if not, by when and what will bring the attrition rate down?
What do you think has caused attrition? Sir, both demand and supply. More IT employees, companies wanted employee. They are not available, so they will start poaching, whether it's a lateral or the fresher, and that increased the attrition rate. Okay. And by when and what will bring the attrition rate down? I think the attrition rate will bring down when the more fresher comes in, they get trained, and once they get trained, then you don't need new employees to come in, or the lateral hire to come in, and that would help. Number one. Number two, whatever now, even the IT companies started realizing that they can't afford to keep paying higher salary and created disturbance within the sector. So I think even now IT companies have become more sensible. That's what my understanding. I may be wrong 100%. My sense is that they've also got a little more matured and said, let's not try to do too much poaching, because if we are going to poach someone else is going to poach our employee, and it's a vicious circle that we are going into, which is benefiting no one. So I think that would also bring down. And second thing I was saying, the startups are asking employees to go. That will further increase the supply for the tech employees for the IT services sector. So these are the reasons I believe. So maybe most probably post-September, we should see some positive impact on the attrition rate.
Okay, this question by Mr. Ajay, please share your views on Sonata Software.
Sir, Sonata Software, let me see, sir. As we speak, Sonata Software is a hold. Please continue to hold Sonata Software. I think it should do well. So please continue to hold Sonata Software.
Okay, this question by Mr. Shyam Sundar. Why it does not make sense to buy beaten down good, excellent quality IT stocks at attractive valuations now, instead of waiting and trying to time purchase down the line after a couple of quarters or so?
It's a level of performance and underperformance. That's a simple thing. Okay, I do understand you cannot time the market, but some of the IT companies do command a very rich valuation versus the kind of growth potential they have, and that's the reason we are saying right now stay away and remain stock specific. That's what we are saying. I'm not saying that they are going to underperform. I again repeat, they are not going to underperform as much as what we saw from April to July. But they will underperform. So what would happen if the index code of Nifty goes up by, for example, 10%? I'm hypothetical, okay? Maybe some of the IT companies may go up by 3-4%. And that's where the underperformance will come in. That's why I'm saying it's not a time to increase your allocation to the IT companies.
Okay, Mr. Sunil, that's it with the Q&A session for today.
So thanks a lot. As I told you, we do have an offer of 19,999 for 2 years. Please avail this offer and start enjoying all the powerful feature at Markets Mojo for less than 30 rupees a day. I'll again request my colleague Jason to please drop the link. Once again, thanks a lot everyone taking time out and attending this webinar. Thanks a lot, Jason, for hosting this webinar. Over to you.
Yeah, thanks a lot, Mr. Sunil, and thanks a lot everyone for attending the event. If you all do have any particular feedback on the presentation or would like to provide any other suggestions on our webinars, you can simply drop it in the chat box. We do have a webinar tomorrow by our founder and CEO, Dr. Mojo Batra, at 7:30 p.m. It's going to be a Q&A session, so if any of you all have any queries and would like to chat with our founder, you can simply come for the event tomorrow at 7:30 p.m. We'll be also sending all invites for the same. Goodbye and have a great evening. Thank you so much.